If you're a first home buyer and you're concerned about rising house prices, then you're not imagining it. It's not this thing where you've got all these old people saying, oh, young people don't know how to work, we're at 18% interest rates, blah, 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 all of that sort of stuff. The struggle is real. The reality is it's getting harder and harder to buy your first home as a young person in Australia these days. Sometimes not even a young person. The average first home buyer is now 37 years old. Here's the thing though, the government knows this, and for the last 25 years, they've been rolling out all of these incentives to get first home buyers into the market. The main one that's being talked about at the moment is called the First Home Guarantee, commonly known as the 5% scheme amongst first home buyers. Why? Because you need just 5%. But here's the thing, what nobody is talking about. There is a flip side to all of these sorts of schemes. Every time the government makes it easier for first home buyers to get into the market, what they're doing is they're bringing demand forward. They're bringing in all these buyers into a market where there's already constricted supply. What that means is there's more buyers of houses than there are sellers of houses. And what that actually does is it pushes up prices of houses for the next load of first home buyers who need to get into the market. For those of you who don't know me, my name is Will Bell. I'm a mortgage broker. I've been doing this for 15 years in my own business. For all of that time, I've been helping first home buyers get into their own property. Today, we're going to break down the first home guarantee. It's pretty simple once you know the rules. Let's get into it. So the first home guarantee is the federal government, through their body, which is called Housing Australia, guaranteeing a part of the loan to the bank. So what does Housing Australia need to guarantee the loan to the bank? Well, from the bank's point of view, that's really risky. If you're only putting in 5%, the bank's lending the lion's share of the property, which means they're exposed. Basically, if the value of the property goes down and you don't repay your loan and the bank need to sell it, they're the ones exposed, because if the property prices drop, the bank are going to lose money. So in the past, how they've avoided this is they've used lender's mortgage insurance. So to cover up this risk, the bank or the lender gets you, the borrower, to pay for mortgage insurance. Here's the catch with mortgage insurance. If you're putting in a 5% deposit, the mortgage insurance cost for you is going to be another 4% on the loan. So if you're borrowing 500 grand, you're going to save up another 4%, you're going to save up another $20,000 just to cover the mortgage insurance. So what the government have done is they've come up with this first home guarantee to save people from having to save up the extra 20 grand. And that means they can get in to the market, buy their first home sooner rather than later. What we need to be aware of, guys, is this scheme changed as of October 2025. There's been a bit of talk about it because it's become easier for first home buyers to get into the market. And what that has done is push house prices up, especially on the lower end of the market, because all of these guys are getting in off this scheme. So what we need to do is we need to be aware of the changes, because any information on the internet before October 2025 is going to be old and outdated and not applicable to you. So let's talk about who qualifies for this scheme right now. So you've got to be either an Australian citizen or a permanent resident. Before, you didn't need to be a permanent resident. I think that was before about 2023. There's been a bit of news on that lately. You need to be a first home buyer. You need to live in it. You can't, whilst it's guaranteed, you can't have this as an investment property. That's one people get caught on. They think they can buy it, live in it for 6 months and then rent it out. Not necessarily. You need to be very careful there. What changed as of October 2025 is they removed the income cap. So before, your income cap, I think it was was capped at 200 grand a year, something like that. And that stopped a lot of people from getting in on this scheme. So the government, in all their glory, said, how do we get more first home buyers in the market? Let's remove the income cap on this scheme. And what it's done is it's pushed a lot of demand into the market, and that's boosted home prices. So what are those caps? Well, they vary depending on where you are. Sydney's 1.5 million. Brisbane, Gold Coast, Sunshine Coast, it's $1 million. So they're quite liberal. Melbourne and Geelong in Victoria, 950 grand. Perth is 850 and SA is 900 grand. And one important thing you need to know about this is it's not every lender that's got access to this scheme. There's only particular lenders that have access to this scheme. So very important. A mortgage broker is really handy. I'm biased because I am a mortgage broker, but a mortgage broker is really handy in not just identifying who is on the scheme, but who will approve the loan on the scheme, because there are a lot of lenders that might decline your particular position. For example, I had one client this week, which I got approved. Every lender on this scheme was going to decline it because the credit score was too low, but we got one lender that approve this loan. So mortgage broker, so long as they're a good mortgage broker, they're going to be gold in this sort of scenario for a lot of borrowers out there. Okay, so here's the deal. Here's why it's pushing up the house prices and everyone's getting in. You only need a 5% deposit. You're going to save tens of thousands in lender's mortgage insurance. There's an unlimited amount of places on this scheme now. Before there used to be 30,000 a year. Now it's unlimited and there's no income ceiling anymore. So high income earners are getting in on this scheme. Okay, so here's the real talk, which often gets lost in these sorts of things. Number one, you're only putting in 5%, which means you're borrowing 95%. So even if the lender says, yep, you're cool to borrow 95%, it's not always what you should do. I would urge people to think longer, to think over a period of decades, because you're getting into a 30-year loan agreement most of the time. If you're an average age of 37, that's going to put you to 67 before you've paid off your debt. You need to be thinking long-term here. Yes, it's great to get you into the market, but you need to be thinking long-term still. The kicker on this scheme, as I said before, is it pushes house prices up. It doesn't reward people that way. And people will get upset about that, and I get it. But all you have to do is go back in history and look at the facts. And by and large, that's what happens. People wait. The last time was COVID, pre-COVID. In this area, you could buy a house for 550 grand in Frankston North. I had buyers that wanted to do it. They put that on pause. They renewed their pre-approval 3 or 4 times. That's like a year. They've waited. Property prices have moved. The government dropped the rates. Again, first home buyers came into the market. More schemes came in. Houses went up by 25%, 125 grand, 150 grand, whatever the figure is. But these guys got priced out. So we have to be aware of what's happening in the broader context. The reality is the system rewards people who get in. Now, managing your risk, as I said, is another thing. Managing your repayments is important because rates can go up. Now, property caps still apply to this. 1.5 might sound like a lot for Sydney, but when you look at the Sydney market in total, 1.5 is still not going over the top, which it even feels bad me saying that. But that's the truth of it. So you need to be aware of the price caps in your own capital cities. You need to be aware of genuine savings. You can't just get some money from a relative or somewhere and tomorrow it shows up in your bank account that 5% came up. The bank are going to ask questions. They want to know that that money's been in your account for a few months at least, and that's one of the measures on genuine savings. So how do you apply for this? I'll give you the basic version, but I also have a mastermind video. Click the links below, it's free. Chuck in your email and you'll get the 45-minute version of how all of this works. But how do you apply? You check your eligibility. You do that through a broker, or you can do it off the website, the Housing Australia website. I think it's firsthomebuyer.gov.au from memory. I would suggest work with at least a mortgage broker, a conveyancer, and a building inspector who know what they're doing. If you need a mortgage broker, obviously, my links are below to have a chat. Get your pre-approval first. Mortgage broker will sort that out. But your broker also submits the first home guarantee. So they do all the paperwork through the bank. They'll hold your hand through the whole process. If you need to know anything else, you can find my details below. Go watch that mastermind or any other videos. Cheers.